Hi and welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, I'm going to take you through the week ahead. We're going to take a look at the upcoming news for the week as well as some charts of interest. So let's just dive straight into this. We can see that obviously there's lots of data coming out this week, but probably the most notable will be the US federal funds rate decision. Not only the interest rate decision, but the FOMC statement and the FOMC press conference will be pretty important at this event due to the fact that the market is trying to anticipate if the Federal Reserve are going to cut rates in 2024. So are we going to see anything from that? We'll have to wait for the announcement, obviously, but any kind of dovish tone here could obviously set the standard for the markets for the next sort of move. We do also have NFP coming out later in the week on Friday, and that is expected to see quite a significant fall, especially in the NFP employment change. We're expecting a 177 over a previous 216, and the unemployment rate is set to rise as well as average hourly earnings is set to fall. So a little bit of mixed data expected to come out of the US this week. Obviously, we'll get a little bit of hints of the non-farm employment change when the ADP comes out on Wednesday. But like I said, federal funds rate expected to remain at 5.5%. However, it'll be interesting to see if the Fed do talk about any kind of future cuts. In the UK, we also have a BOE monetary policy rate decision as well. You can see there's expectations that the official bank rate will remain at 5.25%. Obviously, in December, CPI rose in the UK to 4%. So maybe the Bank of England will need to talk about keeping rates at 5.25% for a little bit longer. Again, are we going to see any language from the central bank that suggests that cuts could come later in the year? Moving on then. So let's head over to the strength meter. What has been moving from last week? Well, we can see that the Japanese yen has remained the same at -7, still seeing a weak yen here at the moment, and that doesn't look like it's going to change anytime soon. However, we have to stay vigilant because we are in this reversal zone. It can lead to some strong reversals. The last time we kind of hovered in and around this area for a few weeks, we did get a very strong upward move in the yen, so I'm still kind of looking to see if that could be a condition that forms going into this week. So basically, if you're looking to short the Japanese yen, just be a little bit wary that we are potentially in a reversal there. The Swiss franc still remains fairly strong. It climbed back to +5, so that'll be another market of interest going into this week. However, the dollar was the sort of dominant market in terms of it's continuing to rise in that strength, and if it does continue, then there'll be some interesting developments across the major currency pairs. Going into the US dollar index then, so we kind of talked about this last week with the potential of price coming back down into the recent consolidation highs to act as support. 102.75 was that area of interest. Price did test that. We're consolidating again at resistance. Now, obviously, that doesn't necessarily mean that the market is going to reverse here. If anything, it could actually mean that price is more likely to break to the upside because we're not seeing aggressive selling coming in at the moment. In fact, price is a bit balanced here. So we could expect if the buyers were to sort of get a hold of the market here, that they could drive the US dollar index into that sort of 104.20, which were those highs that formed in December. I still feel a pretty crucial point for the dollar index is 104.50. I think if we got above that, we could see a move up towards the 107s again. If we do obviously see any kind of dovish tone from the Fed, any kind of expectations of a rate cut, that could put a bit of a dampener on the dollar rally that we're seeing at the moment, and a break below 102.75 would lead to a move more towards that 102 in my opinion. Going on to cable then. So cable's an interesting market. The reason why I featured it this week is obviously because we have two central bank announcements. We have the Bank of England and we have the FOMC. So we are in this sort of trading range at the moment between that sort of 128 area down to the 126. Will we see some kind of breakout this week depending on the language from the central banks? You know, what if the Federal Reserve are a little bit more dovish in tone and the Bank of England a little bit more hawkish? Would we see a breach of 128 and a move towards that 1.2950, which were these highs that formed back towards the end of July? Or will we see the opposite and will price breach 126 and a move towards 125? Definitely something to consider, I think, here for cable this week. The Australian dollar versus the US dollar was something that we featured in last week's video. I like the idea of price remaining below this 0.66 level, and in fact this level being a very sort of strong resistance area. Price has remained below it, but we've just gone sideways here, so we need to see something develop. I think if we can breach through the lows here of that 65.25 handle, we could see a little bit more downside towards the 0 spot 64.50. If we don't and we see a breach of the 0 spot 66 handle, then we're probably going to test the 0 spot 66.50 lows in here. So that's again something to consider going into this week. The dollar yen then finally remains in this upward trend. We can see the market making higher highs and higher lows. Similarly to the dollar index, we're starting to kind of form consolidation towards the highs of the resistance. If we do see the dollar strengthen and yen continue to weaken into this week, and we do breach 148.35, then the next sort of level of resistance for me are these highs here at 149.70. A breach beyond that could lead to 151s and above. If we do, however, hold and we start to see yen strength start to enter the market, maybe the conditions this week could kind of create a little bit more safe haven buying, considering it is a high impact news week, then we might stay a little bit capped at this 148 and maybe continue to range, and a move might develop with a move down to 146.25. So keep that in mind as well going into this trading week. Thank you for watching this video. I really hope you enjoyed it. If you did, leave it a thumbs up, subscribe as well if you're new, and I'll speak to you in the next video.